once we really clear $40 an ounce on silver, it's going to make a beeline for 50. And there may be, and there probably will be rather, a little resistance around 50 because that's a massive double top going back to 1980 and 2011. But once we take that out, I think it's going to explode higher. And I think we'll be headed towards $100 an ounce is silver. Of course, gold's going to be 4,000 by then, but that still means you get a better bang for your buck in silver. So I think the entry point is perfect. My advice continues to be get out of dollars before the dollar loses any more of its purchasing power. Convert your fiat into real money. Buy physical gold and silver.
Silver appears poised for a significant breakout as it edges closer to the $38 per ounce threshold, a level long seen as a psychological barrier in the market. According to economist and precious metals expert Peter Schiff, if silver can break through this resistance, the path toward $50 becomes increasingly likely, and with it, a new phase of accelerated momentum. The $50 level has historically acted as a ceiling, marking the peaks in both 1980 and 2011. Yet Schiff notes that once this barrier is surpassed, the metal could rapidly surge to $100, driven by growing investor demand, a weakening dollar, and broader macroeconomic instability. Silver's dual role as both a monetary metal and an essential industrial input continues to strengthen its long-term investment case. As concerns over inflation, geopolitical instability, and central bank policy intensify, both institutional and retail investors are paying closer attention to silver. Schiff highlights that market behavior often changes rapidly once technical resistance levels are breached. Investors who wait for confirmation may find themselves buying into a rally that is already well underway, potentially missing the most lucrative part of the move. The historical tendency of silver to move sharply in a compressed time frame adds urgency to any strategic allocation. Unlike gold, silver's smaller market size and broader industrial applications can make its rallies even more volatile and potentially more profitable. This dynamic is particularly important as global interest in hard assets grows and trust in fiat currencies declines. Schiff also ties silver's rising potential to the broader macroeconomic picture, particularly the state of the US dollar and national debt. Since the gold standard was officially ended in 1971, gold has increased more than 8,000% in price, not because gold itself has changed, but because the value of the dollar has steadily eroded. Over just the last 4 years, the US has added $9 trillion in debt, a figure that Schiff argues reflects a political and monetary environment increasingly out of control. In that same period, gold has risen 85%, highlighting the growing role of precious metals as financial insurance. With policymakers showing little appetite for fiscal restraint and inflation pressures persisting, Schiff believes the coming years could mark a historic shift, one where silver, long overlooked, finally captures the attention and capital it deserves. Now, we present the clips from Peter Schiff's interview, where he discusses the potential rise in silver and gold prices based on market and economic indicators. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
And silver, I think silver is getting ready to explode. We did get as high as 39.5, I think, while I was on vacation. So we've got a little bit of a psychological barrier up there, close to 40. But I think once we really clear $40 an ounce on silver, it's going to make a beeline for 50. And there may be, and there probably will be rather, a little resistance around 50 because that's a massive double top going back to 1980 and 2011. But once we take that out, I think it's going to explode higher. And I think we'll be headed towards $100 an ounce is silver. Of course, gold's going to be 4,000 by then, but that still means you get a better bang for your buck in silver. So I think the entry point is perfect. I think if you don't have enough gold or silver, call Schiff Gold. In fact, we just redid our whole website and we have a whole new shopping cart. Remember, we introduced that shopping cart, I forget, 6 months or year ago, but now we've totally redone it. It's much more user-friendly. It's much more automated. Just to try it out, you should go on there and buy yourself some silver just to experience it. But you can go over the weekend. It's 24/7. You could just go in there and you could buy, your gold and silver. You don't have to speak to anybody. Not that, we're happy to talk to you. I got plenty of reps that'll walk you through the process, but you can do it all yourself. You could buy some gold coins. You could buy some silver rounds or whatever, silver bars, and load up your cart, check out. It's a very smooth process. In fact, I would encourage people not to wait, until Monday. Go over the weekend before. Who knows what's going to happen on Sunday night? Anything could blow up. I think these metals are like, the proverbial a coiled spring, and they could really go. I just, went back to 1971, what Nixon did, and then what has happened since. And it's a great video. It's about 12 or 13 minutes long. So if you haven't watched it, look out for it. I just put it on my Twitter account earlier today, so it's at the top of my feed. It may not be there by the time you watch this, but you can scroll down. But it's The Day the Dollar Died is the title. You can also search it. It's on my YouTube channel, so you can search it on YouTube, The Day the Dollar Died. But it's interesting that you can see the national debt clock on that video. And just since then, in the 4 years exactly since I made that video, the national debt is up by $9 trillion. And the price of gold is up by 85% in those 4 years. Now, of course, if you want to go back to 1971, I mean, the national debt was tiny. I mean, it's like, it wasn't even it didn't even get to $1 trillion until 1980. So I don't remember what it was back then. Maybe it was a couple $100 billion, right? And now it's, 37.5 trillion. But gold, since Nixon took us off the gold standard, and when he did that, gold was $42.22 an ounce after two devaluations from 35. Gold is up 8,000% since then. 8,000%. Now, it's really not gold going up, right? Because gold's the same, right? Gold, an ounce of gold hasn't changed. It's exactly the same as it was 54 years ago. A lot of other things have changed. A lot of other things have improved. Some things have gotten worse, depending on, what you're looking at. But gold hasn't changed. It never changes. It's eternal. It's exactly the same. What's happened is the dollar's value has collapsed, and it's lost almost all of its 1971 purchasing power. I mean, it retains a fraction of it, right? But it's lost most of it. And, if you go back to 1971, prior to that, 1968, they had hearings on taking the U.S. off the gold standard, removing the gold backing. And my father, Irwin Schiff, is one of the few people that testified against it. The chairman of the Federal Reserve, the secretary of the Treasury, right? Those guys were all in favor of getting off the gold standard. And they actually said that gold was weighing the dollar down. And if we freed the dollar from gold, the dollar would gain value and gold would go down from $35 an ounce. My father said the opposite, that gold would go up if we left the gold standard. And of course, it went from 35 to 850 in 1980. So just as they are today, the Secretary of the Treasury and the Federal Reserve were completely wrong. And I'm right? I'm carrying on my father's tradition about being right. Because, when I made that video 4 years ago, I said buy gold. I mean, it was actually a promotion for Schiff Gold. The video ends with buy gold now. And if you bought gold then 4 years ago, you're up 85% just since then. But, I don't think this bull market is over. Again, we've got a long, long way to go because the dollar has a long way to fall. I think this trend is going to go hyperbolic.
As structural vulnerabilities in the U.S. economy become increasingly apparent, ranging from stagnant job growth and soaring deficits to rising inflation pressures, what was once portrayed as a recovery is revealing deeper signs of stagnation and fiscal imbalance. Peter Schiff highlights that the most recent employment figures fell significantly short of expectations, while revisions to previous months marked the steepest downward adjustments seen in decades. At the same time, the July federal budget deficit swelled dramatically, becoming the second largest in history for that month, even without the safety net of emergency pandemic aid. These data points collectively suggest a return to stagflation. Weak economic momentum paired with escalating inflation, conditions that undermine the credibility of mainstream economic narratives. Meanwhile, financial markets and global institutions are responding decisively to these warning signs. Schiff points out that inflation is proving more persistent than anticipated, as evidenced by a sharp rise in the producer price index. Tariff-driven cost pressures and a depreciation of the US dollar are already feeding into higher prices across the board. In the bond market, yields are climbing as institutional investors retreat from treasuries, signaling diminished faith in US debt stability. At the same time, Schiff notes, central banks worldwide are moving aggressively to reduce reliance on the dollar, opting instead to bolster gold holdings as part of their strategic reserve management. This growing shift toward hard assets underscores a broader loss of confidence in fiat systems. With sovereign and institutional demand for gold and silver intensifying, Schiff warns that the opportunity to build positions in precious metals before the next wave of appreciation may soon be gone.
I specifically said these numbers are going to be revised down because everybody was celebrating that the numbers came out better than expected. And I said, this is BS. They're not going to end up being better than expected. They're going to get revised down to weaker than expected. And I was 100% right. That's exactly what happened. In fact, the revisions were even bigger than what I was expecting. But these numbers may not even be right. They may revise them down again, although who knows, because Donald Trump got so mad that the numbers were so bad that he fired the head of the Bureau of Labor Statistics. He claimed the numbers were rigged to make him look bad. And now he's got a new guy, I think, but they may not even report the job numbers anymore for a while, right? Until they get it right. So maybe they need to fix it because I think Trump may be trying to hide the bad news from the public. See, Trump keeps talking about how the economy is booming. We have the hottest economy in the world. We don't. There is no economic boom. It's just a fantasy that Trump is trying to sell as reality. You know, if you look at the budget deficit for July, the month of July, it increased by 20% over last July. It's the second biggest July deficit in the history of the country. The only July where we ran a bigger deficit was 2021 when we had all the COVID stimulus. Well, we don't even have that anymore. And we got the benefit of all the tariff revenue. Yet even with the tariffs, we still had the second biggest July deficit ever. Now, if we had a booming economy, we wouldn't have booming deficits. Booming economies reduce the deficits, right? Because the government doesn't have to spend as much on unemployment or welfare, and people are earning more money. They're paying more taxes. There's more jobs. There's more profits. And so the government is in better shape. The fact that the deficits are exploding is more proof that the economy is not. In fact, if you look at a lot of other economic data, the signs of stagflation are everywhere. In fact, this week, yesterday, we got the producer price index for July spiked up 0.9, way more than expected. Year over year number, much bigger than expected. I've been saying for a while, inflation has bottomed and is headed much higher. And now we're starting to see it in the data. Of course, we're going to see bigger and bigger prints in the months ahead as a lot of the tariffs really start to get factored in to these prices. And of course, businesses are going to end up raising prices by more than the tariffs. I mean, not only are they not going to absorb the tariffs, not only the consumer is going to pay more because as the prices go up, sales volumes go down. And so now businesses are forced to generate profits on lower sales. So how do they do that? Well, they need to increase their margins. So they have even higher prices and they try to make a profit with a smaller group of customers. But it's not just the tariffs and the need to, increase margins that are going to cause prices to go up. The dollar is very weak and is going to get a lot weaker. In fact, the dollar fell again this week. And even though we got a big bounce in the stock market, again, we had new highs this week, record highs, NASDAQ, S&P 500, right? That's all a bunch of speculation. Those markets really don't tell you anything about the economy. Donald Trump and the Trump administration, they're still trying to claim that we have a great economy, and they're pointing to the stock market as an indicator. You see record high stock prices. This proves we have a great economy. Well, Donald Trump said that under Biden, we had the worst economy in the history of the country, yet we set multiple record highs in the stock market under Biden. So, the stock market means nothing, right? The stock market can go up, even though the economy is lousy. And that's actually what's happening. The stock market is just a bunch of speculation, but the real markets are the foreign exchange markets, right? And the dollar keeps going down. The dollar is very close to the lows that it hit when it was collapsing following, Liberation Day. So you got a problem with the dollar. The weak dollar is going to put upward pressure on prices because, the dollar's going down. So we need more dollars to buy our imports. That's on top of the tariffs. But look at the bond market. The bond market was down on the week, meaning yields went up. The 30-year U.S. Treasury closed the week at 4.93. We are almost back at 5%. We are not far off the lows. The reason that Donald Trump initially called off the phony reciprocal tariffs was because he said the bond market was yippy. Well, it's still pretty yippy because it's about where it was back then. There hasn't been a recovery, and that's because there's real money in the bond market, right? Nobody is buying treasury bonds for, to speculate and get rich, right? It's not a meme stock. This is serious money that is selling U.S. treasuries. So the real money is getting out of dollars, getting out of treasuries, and getting into gold stocks, buying foreign stocks. That is what's going on. Foreign stocks are jamming. I have a foreign dividend payer fund that we also manage. I think it's up about 34, 35% on the year. The S&P, I don't even know if it's up 10%, 9%. Foreign markets are, leaving the U.S. in the dust. It's like the U.S. stock market is standing still now because money is being sucked out of the U.S. economy and it's being brought back into the rest of the world. And that trend is going to continue as the U.S. economy slips deeper into stagflation. We're going to have a weakening economy. We're going to have strengthening inflation. The government might try to hide the numbers from the public, but the reality is going to show up in the bond market, in the foreign exchange market, in the precious metals market. And so my advice continues to be get out of dollars before the dollar loses any more of its purchasing power. Convert your fiat into real money. Buy physical gold and silver. Keep buying it. I know that I talked to a lot of the reps at Schiff Gold, and sales have been relatively lackluster this year, despite the fact that gold's up 25%. Not a bad year. It's doing a lot better than the stock market this year, gold. People are worried that they're buying the high. You're not buying the high. You're buying today's high, although gold was a bit higher. But a few years from now, it'll look low. You're going to have to get used to buying the highs. If you're going to keep buying gold, right, moving into the market, buying a little bit more every year, converting your savings into gold, get used to paying higher and higher prices because the dollar has one way to go, and that's down. And that means the gold price has one way to go, and that's up. That doesn't mean it goes up every day, and that doesn't mean it never declines, but the declines are going to be very short. And that's because there is big money, right? The major central banks, and maybe it's some of the not major central banks, all the central banks are de-dollarizing.
Looking forward, the trajectory for gold and silver prices points towards significant growth as economic uncertainties deepen and traditional financial systems face mounting pressure. With inflationary forces intensifying and currency values under stress, investors are likely to intensify their demand for precious metals, which historically serve as reliable stores of value in turbulent times. Supply constraints combined with rising global demand, particularly from large institutional buyers, will create upward pressure on prices, making these metals increasingly attractive as a safeguard against erosion of wealth. Moreover, as confidence wanes in conventional assets such as government bonds and fiat currencies, a reallocation of capital toward tangible assets is expected to accelerate. This shift will be fueled by the desire to protect purchasing power and diversify portfolios in the face of economic stagnation and fiscal imbalances. Short-term corrections in precious metals are likely to be limited and quickly reversed due to persistent buying interest. Consequently, gold and silver stand to benefit from a sustained upward trend, offering both protection and opportunity in an evolving financial landscape. How do you anticipate the price trends of gold and silver evolving in the near term? Share your thoughts in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.